Hey there, Dale.
Well, good morning. How are you?
I'm doing pretty good. Today's a pretty decent day in the mortgage market. How are you doing?
You know, I could complain, but who'd listen?
I will. Anyways, let's jump in to interest rates. Dale, what's going on with interest rates this week? We did talk last week we might see a rise. Why haven't we seen a rise?
Well, we actually have. It's just not recording yet. So, as we know, this is always a week behind or so. Today's the 15th, and it's talking about the 10th. The rates literally over last week, they just started moving up quickly, very quickly. And so I do know that when we do this next week and we show an average, it's going to be higher than 6.62. Now, that being said, they are starting to come back down a little bit, but there for about 4 days, it was looking like we lost all of the gains that we got over the last couple weeks.
Yeah, and that's basically exactly what happened. We could see back here right at the beginning of April. I believe April 4th is when we saw this big drop, or not April 4th. So it was a Friday, which I believe was April 7th. My apologies. And we just had the market fall out from underneath us. Remember, this chart is inverted. So when it goes down, interest rates come up. When this chart goes up, interest rates come down. So today and yesterday are really good gains. We're starting to see the market do a little bit of a reversal from its previous reversal, which is pretty wonderful. But as you can see, we had a really steep fall. I even had some clients that, pricing them out, they were probably going to see nearly a 0.5% interest rate increase compared to just a week before. Now, as you mentioned, Dale, April 10th is the last reported data that we have on this interest rate chart, and April 10th was right here. Oh, I clicked the wrong slide, bear with me. April 10th was right here, this second red column. So we still had 3 more days of decreasing mortgage-backed securities. So what's even going on right now, Dale? I mean, is there a recession on the horizon? What is that going to do to mortgage rates? Why is it that we're talking about inflation with tariffs, but we have a recession on the horizon? What's going on?
Short answer, yes, no, and yes. So, the reality is we are headed towards a recession. We quite frankly need to be headed towards a recession to get any sort of economic recovery. That being said, as we've all talked about, recessions are not good for people individually. Job loss, it's heartbreaking. But the reality is recession is the cure for inflation. And everybody strives for a happy medium. And what happens, it's almost like, and I think of it, if you have a swinging pendulum, the momentum just keeps going. And if you don't take corrective action, instead of a short swing, it becomes a big swing. And pretty soon things are way out of control. So the government has to step in and start making adjustments so that we can get things back to normal, whatever normal is.
Right. And the truth is, you said it right at the beginning of everything. We've been expecting recession since COVID. We did have a small blip of recession during COVID, but that was when everyone was locked down and literally money stopped being spent. But the truth is that this has been a long time coming. It's been delayed. We've had the economy inflated, a lot of fake jobs put in, a lot of fake money put in, and now it's getting to a point where it's all coming to a head, partly because of tariffs, but partly because we've just been waiting on it for so long. So inflation, too many dollars chasing too few goods. Now we're entering a little bit of recession where there are a lot of goods, but there's not a lot of money wanting to be spent. And part of this comes into wages and jobs. Less demand for jobs. We've seen a ton of government jobs fall out, but now we're starting to see a lot of private industry jobs fall out as well. Less demand for jobs equals lower wages. I don't need to pay you as much because I'm not struggling to find workers. If you're not willing to do the job for the wage that I want to pay you, I'm going to go find someone who's unemployed that's willing to do the job for less wages. And this basically causes people to spend less money. They're going to be more conservative with it. Well, how do we know that this is going to be the case? We have record total household debt at 18.04 trillion. That is insane. And then of that, credit card debt is 1.21 trillion. This is the stuff with 25% and 30% APRs. That is high. And Dale, the whole point of debt is that you're spending money you literally don't have with the expectation that your job in the future is going to be able to pay for the money you don't have. So now we're ending up in this situation where we have a ton of debt. We have a ton of people who might be losing their jobs or experiencing less wages. And then, to make it even more drastic, we have tariffs. There's a 10% flat rate, 25% on Mexico and Canada, and 145% on China. If we're going to have lower wages, less money, less spending, now the goods that are coming in as well are going to be more expensive. This just spells inflation or a recession, and it's going to shrink the economy. Hence why we're seeing mortgage-backed securities take a little bit of a bounce up, but uncertainty is still in the air. Nothing is guaranteed here.
And truth be told, and you and I have said this, we've been in a recession for the last 2 years. It's just that recession is a bad connotation to it, so we've been in denial. But the reality is that's where it's headed.
Yeah, that's exactly where we're headed if we're not already in it. We will see as things shake out a little bit more. Tariffs do have that 90-day pause, so we're still going to have a little bit of a bump or a change or something happen in about 3 months. But for now, do expect that it's going to be a little bit rocky. But as we start to see recession, mortgage interest rates should drop. So clients who are watching, realtors who are watching, do understand that there is going to be a better horizon in the housing market at the very least very soon. So thank you so much for watching. Dale, appreciate your time as always.
You betcha. Have a great day.
All right. Bye.
Bye now.